Hi, Peter Jones, Chartered Surveyor, author and property investor. And yesterday we had the budget. Now it was billed as that it was going to be quite a boring budget. Why? Because basically the country is skint and the government haven't really got any money to give away. If anything, they really want to take the money off us to keep paying down the debts. But of course politically that would be quite a bad move as well. So everybody was expecting quite a neutral budget. And in many respects that's what we got. Now property is very much in the news at the moment because the government have declared that they're going to resolve the housing crisis, whatever they mean by that. And so of course that featured in the budget as well, and a lot of commentators are talking about the stamp duty exemption which is being brought in for first-time buyers. Great news for first-time buyers. Or is it? Well, if you think of it this way, many first-time buyers probably weren't going to be paying very much stamp duty anyway. Under the current stamp duty regime, properties under £125,000 are exempt from stamp duty anyway. Now I'm not talking about investment properties, I'm talking about properties for owner-occupiers. If you draw a line north of, say, Northampton, you will find plenty of properties which are priced at or worth £125,000 or less. And there's a lot of property in the country outside of the southeast and outside of London which would have been exempt stamp duty-wise for first-time buyers anyway. So my guess is that for most first-time buyers, those outside of London and the southeast are probably not going to make a great deal of difference, to be honest. The other big thing in the budget, of course, was Philip Hammond restating the government's commitment to see 300,000 new properties being built each year. Now just to be clear, that's not properties being built by the government, but they just want to be able to facilitate things so that private developers in the main will go out and build 300,000 new properties. So how are they going to do it? Well, there's talk that they're going to change the planning system. We haven't seen any details of that yet, no doubt that'll be coming. There's going to be a statement very shortly, could even be today, as to how that's going to happen. Be interesting to see what they come up with. But some of the things which they have brought in, which would be quite interesting, is that there's a £3 billion fund for small developers, for small builders, for example. Now, I don't know the details around that. As always in the budget, there's a lot of headlines but not much detail. The small print comes out afterwards. So we're waiting to see what that actually means. But a fund for small builders to be able to build. There's talk about councils being encouraged to release more land, for example, particularly smaller plots. Now, the thing which makes that interesting, I think, for us, is that you've probably noticed that over the last few years, landlords and investors have become increasingly unpopular. I don't think that's going to change, and if there's a change of government, we'll probably be even more unpopular again. But everybody recognises the need for new properties to be developed, affordable housing and properties which are affordable to rent. So build to rent, I see, is going to become one of the big strategies over the next decade, 2 decades, whatever, until we actually get to the point where there's enough houses, if we ever get to that point. Unless the government or a future government backtrack on all of this, I can see that we're going to be encouraged to build. So building rather than buying to rent could be a way forward and be a lot more popular with the politicians, which means that we potentially may even see some tax breaks coming along to help us to do that. We will see. The final thing in the budget, which is probably going to be missed by a lot of people, but which could be very important, is the indexation relief for limited companies is going to be frozen from January 2018. Now that sounds technical and it sounds boring, but it is important. Why? Because a lot of investors and landlords have been buying properties into limited companies over the last few years to try to get around the Section 24 tax changes. Quick summary, Section 24 means that mortgage interest relief is being phased out, which means that from 2020 landlords and investors will no longer be able to offset all of their mortgage interest against the rent when calculating profits. Now this applies to landlords who've been buying properties in their own name, so as a consequence a lot of landlords and investors have been switching to buying properties into limited companies. Makes sense. But what's the Chancellor done now? Well, there was speculation that he may actually take away mortgage interest relief for limited companies. He hasn't done that, but what he has done is taken away indexation relief. Now what's indexation relief? Well, it's essentially the limited company version of having a capital gains tax allowance, because what it meant was that if you bought a property, say 10 years ago, if you then sold the property at a gain within the limited company, before calculating the corporation tax that you would pay on that gain, you'd be able to inflate the price of the property that you paid for the property to give it a notional new value, so that you could basically deduct a higher figure from the new figure that you've achieved, meaning you pay less tax, if that makes sense. That's going to be frozen. That means that going forward, if you buy a property in January 2018 and then sell it, say, in 2025, and you make £100,000, you will pay corporation tax on the full £100,000 gain. So that could be big news for landlords, but it's kind of got lost in all the hubbub. It got lost because everybody's talking about stamp duty for first-time buyers. Great. So there we are. That's a very quick overview of the budget and how it may affect us. Here's to successful property investing.